let's say I have a property now and I'm looking to buy a second one and leverage my current asset uh, to pull some funds for another property. And this is for a rental property, and I'm pulling from my uh, home, my current home. So,
Mhm.
do you suggest that I should refinance and do a more traditional way of refinancing, pulling money out of my property and to have enough for a down payment for my next rental? Or do you suggest people use a home equity line of credit, which is referred to as a HELOC?
Okay. I think we need to share with people that for these questions that we're doing, I don't know
Yeah,
the question in advance, right? So it's not like I've had an opportunity to go research my answer. So
right,
Daniel's in charge of identifying questions that he thinks our audience would have an interest in, and it's my
right,
job to answer that question to the best of my ability with the knowledge and skill set that I have. So what I'm going to share is exactly what I think. Okay, it's not
right,
something that I went and found that I think is a good answer. I'm
right,
just going to tell you what I'm thinking, and you don't have to like it. Of course, everybody
right.
doesn't always agree. But the reason we look at different videos is so we get different perspectives, right? Different opinions. So that's
Exactly.
okay. So before I answer directly the question about home equity line of credit, I want to mention something that happens so very often, and just based, I guess, on because of the books I've written and my recognition in the marketplace a little bit. And someone will proudly tell me that they bought a home for $100,000 and 22 years later it's worth 500,000. And they
Right.
truly think of themselves as a genius. They think that they've really done something. And it's not to me for me to say otherwise, right? I mean, I'm happy for them. You bought obviously a reasonable or a good property that is appreciated in value over many years.
Right.
So, but I don't give you the genius status. Again, I'm not saying this out of my mouth. But this is what I'm thinking because they're so proud of themselves for having done that. And what I'm really thinking inside is, well, if you were really that smart, why didn't you buy two homes?
Right.
Because, why didn't you buy a rental property? Because that second one would now pay off your primary.
Yeah.
And so you're not a genius because you bought one home that happened to appreciate in value. You're very fortunate. Equity is a gift, it's not a right. And it
Right.
does increase and it does decrease. So back to the question about a HELOC, home equity line of credit is a very dangerous thing for Americans
Okay.
because so few have fiscal controls.
Okay.
And I can remember when I was first starting out, I went to several banks just looking for a line of credit. I wanted a $50,000 line of credit. I knew I qualified for one. I'm just looking for a bank that's going to provide me with this line of credit.
Right.
And the first bank I went to declined my application and said, John, we'd be more than willing to loan you some money to buy a house or a car, but we're not going to loan you any money for your real estate business. And
Right.
that just always stuck with me that, okay, so I'm a good enough borrower to buy a consumer good, but I'm not a good enough borrower in your eyes, Mr. Banker, to buy an investment property and to have that as part of a growing portfolio.
Right.
So banks like, don't get married to your banker. I think that's what I'm really trying to say because the personnel do change, their policies do change. You have your own perspective on what you're trying to accomplish. So you need to keep that intact no matter the outside advice you get from a banker, because bankers are risk adverse, right? They don't want to do anything that's going
Right.
to lose the banker money. Their risk profile is far different than yours as the consumer, particularly if you're a real estate investor. They think you're basically living in the Wild West trying to do harm to the world because you're taking risk on
Right.
behalf of yourself and your family and your investors. So a HELOC, home equity line of credit, is a very risky um, tool because most Americans don't have fiscal responsibility. You'll get a 50 or 100,000 or $200,000 line of credit behind your first mortgage on the home
Right.
that you live in. And then if you don't treat it right, it just becomes more debt. It
Right.
just becomes more debt. And I
So,
don't think your personal residence is real estate. I've said this many, many times. Your personal residence is where you live. Yes,
right.
it happens to be real estate. Yes, it happens to be, a saleable, functional, hard asset. But hopefully, you're not making financial decisions outside of that based on outside factors on the house you're living in, because that's home. So leave home alone. If you
Right.
can get it to zero debt, if you can get a low loan to value mortgage and pay a fixed rate, home is safe. don't mess around with home.
Right.
I don't recommend a home equity line of credit, even for
Appreciate it.
investment purposes.
Thank you, John. Same here.